So let us divide the morning session in 90 minutes now. First of all, 7 to 8:30 is the accumulation phase. This is the first 90-minute cycle of the morning session. This cycle is referred to as AM1, the first cycle of the AM session. The second cycle is 8:30 to 10. This is the manipulation cycle. This cycle is referred to as AM2. The third cycle is 10 to 11:30. This is the distribution cycle. This cycle is referred to as AM3. So what we have is that we have accumulation, manipulation, distribution. 7 to 11:30 AM is my AM session. That's how I look at the AM session. And we will now take a look at this AM session through the lens of these 90 minutes. We will now look at the AM session through the lens of 90 minutes. First of all, we are looking at the following scenario in which a purge of the first AM cycle's high, AM1H, and referred model occurs. The second model will be a purge of the second AM cycle's high and a referred model. The third scenario will be a purge of both the AM cycle 1 as the AM cycle 2 highs and referred model. We will then be looking at the purge of the AM cycles 1 low and referred model, and we will then be looking at a purge of the AM cycle 2 low and referred model, and finally we will be looking at a purge of the AM cycle 1 and AM cycle 2 their lows and referred model. It doesn't take long if you start putting in the work in your own charts after getting introduced to this theory to see the validity behind this theory. So let us take a look at the schematics. The first scenario is a purge of the AM cycles 1, his respective high, and a referred model. The AM cycle 1 is between 7 to 8:30. This is the accumulation phase of the AM session. We can see that the market is consolidating. Buy-side liquidity is being engineered above those highs. Then during the second 90-minute cycle, between 8:30 to 10, we can see that the market trades above that previous cycle's high and it reverts lower. It displaces to the downside. Then between 10 to 11:30, the market distributes quickly lower. What is occurring right here inside of this consolidation? Inside of this consolidation, orders are being accumulated. That means that smart money that have very deep pockets, that have a lot of money, they accumulate shorts here. They then manipulate higher to short once more to trap buyers, to trap retail buyers to be precise, into believing that the market is going to go higher. They buy this on a breakout and they try to capture a run higher whilst smart money is opening more shorts here. This is the manipulation phase. And then distribution occurs and the market begins to sell off because the higher time frame order flow is bearish. So to summarize this scenario, we see a run on the high that forms between 7 to 8:30 during 8:30 to 10, and this sets up the highest price of the AM session, of the morning session, and then the market begins to fall and it distributes going into lunch at 11:30. The second model is the following. This is a model in which, or a scenario / profile, in which there's a purge of the AM too high and a revert occurs. This occurs when the accumulation cycle has went sideways, the manipulation cycle took out the previous cycle's high, so the high of the accumulation cycle, but it did not displace to the downside yet. Why not? Because usually there is a high impact news driver at 10 a.m. that will be used for repricing and manipulation purposes. So what they do is they hold the markets sideways or going sideways between 8:30 to 10, and then at 10 a.m. that high impact news driver gets utilized to send price higher once more, trapping buyers into believing that it's gonna go higher. Buys at liquidity gets taken out here. Smart money sells short against that, and the market begins to roll over quickly during the distribution 90-minute cycle between 10 to 11:30. And then finally, the third scenario that we will be looking at is a purge of both the AM1 high as the AM2 high and referred model. So what we are seeing is the following. We're seeing that both the accumulation cycle as the manipulation cycle were going sideways. Why does this occur? Again, due to a high impact news driver being later on within the AM session, or no high impact news driver at all, and the market just being held inside of a consolidation until a volatility injection at 9:30. What we see is that the market gets repriced higher above these equal highs, above that buy side liquidity. A high forms above there, and the market then begins to distribute quickly. What I want you to take away from this is the following. You might have looked at these schematics and thought, what is he discussing? What is he sharing? I am sharing to you algorithmic reference points without even having to look at the London session or the Asia session. I'm purely looking at 90-minute cycles here. And I don't need to know that, or I don't even have to look at my chart to know that in here a higher time frame POI gets reached during this 90-minute cycle and a high forms inside that POI, and the market begins to fall over because time and price are meeting. At the right point in time, a smart money reversal is occurring at the right price. Alright, so now we're going to take a look at the AM long scenarios. The first long scenario is a purge of the first AM cycle's low, and a revert should occur after that. This occurs when the first AM cycle has been a consolidation, when the market went sideways, then at 8:30 the market begins to run lower, purging a sell side liquidity below 7 to 8:30, below that first AM cycle. Smart money buys down here. This is where the low of AM forms, and the market then reverses and it shows a willingness to deliver higher. Then between 10 to 11:30 the market will distribute higher very rapidly. This scenario usually unfolds when there's a high impact news driver at 8:30 that gets used for manipulation purposes inside of a very bullish market. If we take a look at the second AM scenario, we can see the following. We can see that this is a purge of the second AM cycle's low, and the market then reverts higher. This occurs when between 7 to 8:30 the market has been delivering lower, then during 8:30 to 10 the market continues this sell side delivery, so the market is drawn lower. Why is it drawing lower? Because on a higher time frame, it is retracing into a point of interest. Think back to the market maker lecture where I shared with you that the higher time frame retracement is a lower time frame sell side of the curve within a buy model that will be followed by a right side of the curve higher if the market is going to continue to be bullish. So what we see is that between 8:30 to 10, the market begins to deliver lower, but notice that between 8:30 to 10, a low gets engineered, the market retraces, and it then continues lower. It's vital here that at 10 a.m. the market is not yet below this low, so below the low of 8:30 to 10, because we want to see a final manipulation leg occur at or around 10 a.m. to create a new AM low during the 10 to 11:30 window. Once this low is in, the market will displace to the upside and will then reprice higher aggressively because it's within the distribution 90-minute macro. So this is the purge of the second AM cycle's low and revert model. And I'm now going to answer a question that some of you might have already been asking yourselves. And that's the following. But Zeus, how do I know which model is going to unfold? First of all, you look at characteristics of what are these cycles doing this far. Are they consolidating or are they expanding aggressively? Secondly, you should wonder, or you should ask yourself the following. What is the point of interest where price is likely to trade into and continue from with the real institutional order flow? So if we're bullish, we want to have determined a discount array that could be utilized for a smart money reversal to originate in within a fractal market maker buy model. And we then want to see a previous cycle's low get engineered right above that point of interest, because that previous cycle low is engineering sell side liquidity inside of the point of interest. And it's funny because all the buyers that are buying during that previous cycle and are placing their stops below that previous cycle low, below that low that gets engineered, do not know that below them a real institutional price level is laying that will be utilized to originate a reversal from. They are buying it too soon. And that's how these markets are programmed and engineered. They engineer liquidity right before key market reversal points. When we see that occur and we see that Persian liquidity, it's the most sweetest thing you can see. So let us now take a look at the final delivery cycle scenario for the AM session. This is a purge of both the AM first cycle's low and the second AM cycle's low. This occurs when during the first AM cycle the market has been trading inside of a range, then towards the end it reprices lower, forming a low, but it immediately reprices higher back into the range. Then during 8:30 to 10 the market creates a higher high relative to the previous cycle's high, and it then falls lower. But notice that equal lows are being engineered right here. This is the engineering of sell-side liquidity, but not just any sell-side liquidity. No, it's engineering of 2 cycles worth of liquidity. So during the final AM cycle, during the third AM cycle, 10 to 11:30, there's a significant reference point and liquidity point that can be targeted for manipulation purposes. So when we see these relatively equal lows get engineered and the market shows a willingness to manipulate below that, this is the sweetest purge that we can look for. And when we then see the displacement occur, it is likely to reprice higher very quickly. Again, this scenario occurs when there's high impact news around the end of the AM session, so around 9:45 to 10 AM, or when there's no high impact news at all and 9:30 is the main volatility driver for the AM session. It's important to note that all these scenarios that have been shared with you only occur throughout the day when there are obvious higher time frame, institutional order flow, either bullish or bearish present. If they're not, we can't go into the lower time frames and look for these signatures. We simply can't, because then we will get caught up in chop. Because if the market goes sideways, if it consolidates, if it goes into a seek and destroy profile, that's not something we like. And again, later during the mentorship and during this model series, I will share with you key insights on environment selection and how we can recognize these models and these scenarios likely not playing out. Because knowing when not to look for these scenarios is more important than knowing what they look like. To summarize, here are the time of interest for the AM session. During 9:30 to 10:30 AM, I want to see a smart money reversal form. I preferably want to see signs of a reversal between 9:50 to 10:10. The reason why I preferably want to see signs of reversal between that time window is because that time window is a 20-minute macro. This macro has the characteristic of introducing or injecting speed and velocity into the marketplace, and therefore we want to see a reversal occur during that time window. If no reversal is present during the full hour window, so between 9:30 to 10:30, I will walk away from the charts and I will go on with my personal life. Because I know when the sweetest setups form and when they don't. And if a reversal is not occurring between this time window, then that means to me that, okay, we're likely to see either continuation of chop or we're going to see a late AM session reversal that I am not interested in. I would rather come back during the PM session, during the afternoon session, and see if there's something to trade then. I need to see an expansion during at least 10:30 to 11:30 towards the targets. If, for example, the smart money reversal occurs at 9:45 a.m., I don't anticipate the market to go sideways until 10:30. I want to see it begin to expand from 9:50 to 10:10 on. So here is the final schematic of the schematic that has been shared with you ever since the first release of the first lecture of the market maker buy model, where we can see the sell side of the curve into a point of interest, and this point of interest has to get reached during 9:30 to 10:30. This point of interest is a discount array and the PXL. From there on, we want to see a smart money reversal occur, and on the lower time frames, this looks like a market maker buy model. For the sell side delivery, we can see the following profile, in which a market maker sell model occurs, where the market reprices higher into a premium array or PXH. This is our point of interest, and this point of interest has to get reached during 9:30 to 10:30. This is our time of interest for the AM session. We want to see a smart money reversal occur on the lower time frames right here, and from there on the sell side of the curve.